Welcome back and Happy New Year. Actually, I guess it is a happy Valentine's Day. I'm Ryan O'Donnell, co-founder of the O'Donnell Group, and this is Straight from the Hip. What a start to the new year. While I was thinking back as to how to recap 2018, the first word that came to mind was disappointing. While stocks were positive for much of the year, the fourth quarter saw gains completely wiped away by what was the worst quarter in terms of performance since 2001. At the end of 2018, global stocks were down about 15%. Well, that led pundits and commentators talking about the next recession and why the market was poised to correct, with headlines like, "We're in for it this time." After all, we all know that once markets start going down, they keep going down forever, right? And well, here we are mid-February, and it looks like they were right. Oh wait, no they weren't. Global stocks are up 10% so far this year, and stocks posted the best January gains ever. All this got me thinking about how marketing gimmicks and investment fads are a lot like diets. If I were a dietitian and you wanted to lose weight and came into my office, I would tell you to eat less and exercise more. You might begrudgingly do it for a while, but eventually you would start to Google weight loss. And eventually, my guess is you would get pulled toward the low-fat diets. Whether it's Atkins, paleo, gluten-free, keto, South Beach, I could go on. My point is that while these diets may get you short-term results, long-term they're hard to stick with and rarely work. Similar to diets, one thing we preach here is that in order to have a good investment experience, you need to focus on things you can control and not worry about the noise. Yes, that was the title of our first book, Avoid the Noise, which you can download free on our website. The problem is, all of this marketing is based on you paying attention to the noise. We've heard about investment strategies like FANG, Facebook, Apple, Amazon, Netflix, and Google. This was all the rage the last couple of years. In the mid-2000s, it was all about the BRIC countries, Brazil, Russia, India, and China. Long short funds before that, black swan funds, Asian tigers. I could go on. The point here, at the start of 2004, there were 2,786 mutual funds available to U.S. investors. Today, 51% of those funds are still in business. As Nobel laureate Eugene Fama said, there is one robust new idea in finance that has investment implications every 10 to 15 years. But there is a marketing idea every week. Think about that. To me, that speaks volumes about what we're trying to do for you. Our goal is to help you focus on what can be controlled and help filter out the noise. So where do we go from here in 2019? Your guess is as good as mine. But I do know that if we stay disciplined, stay diversified, minimize fees, and minimize taxes, long-term, you will have a great investment experience. As always, if you have questions or want to discuss this or anything else with me, feel free to give me a call or send me an email. I'm Ryan O'Donnell. Thanks for watching.